Okay, welcome back to the new video. So today we are gonna talk about diversification of your stock portfolio. Okay, so yesterday we were talking about why stock market investing doesn't work for you, or chances are why it doesn't work is because, as you said, like you have no knowledge. Okay, so you decided to start reading books about stock market investing. Okay, and then you saw a concept called stock market portfolio diversification, okay, which means buying hundreds of stocks like this guy has right now here, okay. And I'm gonna tell you, in my opinion, diversification doesn't fully work, okay. It's not one of the best concepts, simply because you have, as you can see here, way too many stocks than to handle, okay. So let's go. Here are the main things that we're gonna discuss. So the main reason why you want to diversify is because you don't fully know what exactly you are doing, okay, how stock market investing works. Then we're gonna talk about that focus is actually the best thing that you can do, and that risk comes from being lazy and not practicing, and also not understanding what stock market investing is, okay. So let's go. Point number one, why you want to diversify is because you don't know what you are doing, okay? You see here, you don't know what you are doing. So what you do, especially when you are a beginner and you want to start investing in the market, is that you go to YouTube, you write, I don't know, best top 10 stocks to buy, and then you see one guy who is doing financial videos, you listen to him, and you heard his advice that, yeah, you should invest in this stock or this stock and this and this and this and that and so on and so on. So basically, that guy told you to listen to his advice and then invest in 100 stocks, and you follow that advice. Why? Because you simply are too afraid to like put your faith, you are too afraid to lose money, okay. So that's why you want to diversify, because you are afraid of losing money, okay. And there is actually better strategy, or should I say better way to overcome this fear, okay, which is the following, okay. So when you start investing in the stock market, obviously you have to get some knowledge, okay. And after you get that knowledge, bro, you should have in your portfolio maximum 7 stocks, or let's say 7 assets, okay. It can be, for example, stocks, it can be, I don't know, bonds, it can be indexes, it can be, I don't know, crypto, for example. Whatever happens, okay, whatever you want to choose and whatever you understand the best, you should focus on one asset, and then within that asset have 7 pieces of that asset, okay. For example, 7 stocks, okay. And then this will actually enable you that you understand those stocks better, okay. You see, you understand them better because you actually have time to analyze them, okay. Let's remove this drawing. Okay, because you have time to analyze them, okay. So what happened with me recently was actually I was having quite many stocks, because I was investing in the stock market intensively since 2022, and at that time I was still fairly a beginner, so I had a lot of stocks, okay, because I was afraid of losing money, okay. And then I started to gradually reduce my stocks because I simply could not analyze all of them, because I had, at that time I was still studying, I had work, then swimming pool, then free time, and in free time I had other things to do, and so on and so on. So I simply did not have time to read all of the earnings report of all of the stocks, because if you want to invest in the stock market, you should understand your stocks, because you are literally giving money to those companies, okay. So you should have time to analyze them, okay. Same is, for example, with the banks, okay. Why banks don't give loans, or for example mortgage loans, to everyone? Because they don't want to blindly put money into their own portfolio, okay. For example, right now with you, bro, you listen to that advice on the internet, okay, you listen to it and you invest in 100 stocks without even analyzing them, okay. This is where the issue is, because you are basically giving money to 100 random companies, okay. Same is with the banks. Do the banks give money to 100 random people? Big banks, yes, they do, because they have that much money, okay. But we don't have bank amount of money, okay. We don't have the same amount of money as the banks have. So we have to be way more picky and we have to be way more careful where we put our own money. Okay, that's why we limit our choices to only the best 7 stocks that we can find, and then we analyze them and we actually have time to understand what those particular companies are doing, what their business model is, how their future will possibly look like based on the data from the past, and also if something changes drastically. Okay, for example, the stock market crash, okay, you have better understanding why your stocks potentially went down. Was it just because of the whole sector went down, or is it because there is some issue with your particular stock? Okay, so that's it, bro. Okay, and you have to think about stock picking as a niche. Okay, for example, with my YouTube channel, I am doing finances, trading, I don't know, a little bit of stock market, basically things that interest me the most. Okay, I am not doing computing, a computer. I am not doing I don't know, some tutorials about do it yourself. Okay, I'm not doing I know, influencing. I'm not doing vlogs. I'm not doing anything about, let's say, sport, gym. I'm not doing car content. You see, I'm doing financial content because this is what interests me the most and this is my niche. Okay, and same is with you as well. Okay, with your stocks. Okay, think about your stocks as your niche. Okay, you don't want to do 100 things at the same time. No, you want to focus on one thing and get one thing done correctly. Okay, so that's why we choose our stocks. Okay, and another good thing about true niche, okay, and cherry picking the stocks actually, is that you cannot beat the market by being just an average person. Okay, wait, let me remove my camera here a little bit because I don't see what it's on the slide. Okay, so you cannot beat the market by being average. Okay, for example, if you would be like everyone else, then you would have a profit of around 10% per year. Okay, because S&P 500 on average gives you from 8 to 10% per year. Okay, annual return. But if you want to be better, if you want to be like Warren Buffett, for example, who has 20%, or those mutual funds managers who have up to 60% per year, bro, then you have to pick correct stocks. Okay, you have to pick stocks. You cannot follow and expect to have amazing returns. Okay, that's why we pick stocks, and that's why we have only 7 stocks maximum in our own portfolio. Okay, and another reason why we want to have only 7 stocks in our portfolio is because we have to be focused on them. Okay, as I told you. Okay, so we have to be focused on our stock market journey. Okay, so what we have to do is, of course, learn before you invest. Okay, for example, if you want to do investing, you should read books. Okay, and then 1 year just practice with investing. Okay, what do I mean by that? Is by paper investing. For example, you will open up your chart. Okay, and you will say, okay, for example, right now I am on Bitcoin Cash. Okay, and you will say, what will happen if I every day at 9 o'clock invest €1 into Bitcoin? Will I make money? Will I lose money? And then, or for example, if you don't want Bitcoin, then of course you can go to, I don't know, let's delete this. You can go to stocks, okay, and boom, Nvidia, okay. You go to daily chart, for example, and you say, okay, every day I'm gonna buy Nvidia in amount of, let's say, €2. Okay, so you buy €2 here, €2 here, €2 here, €2 here, here, you know. That's how you then analyze the stock. Okay, and this is called paper investing. Okay, you are actually in a virtual market. Okay, you are basically in virtual market, and you are seeing what would happen if you would follow your own strategy. Okay, what would happen if you would invest in Nvidia, for example. But if you do trading, okay, like I am doing right now, then you should also paper trade for at least 1 month. Okay, you should practice trading, you should learn the trading strategies, and then you should start basically trading with real money. Okay, but as we said with the stocks, we should not have more than 7% because we want to keep our money in a niche environment. Okay, and so same is right now here. Okay, focus on one thing. Either you want to focus on investing or you want to focus on trading. Okay, do whatever you are more comfortable with. Okay, and then once you are comfortable with the one, then you go to the other. Okay, this applies for both trading and investing, and also this applies for stocks, for example, okay? Because look, you have, with the terms of investing, you have different types of assets, okay? You have growth stocks, you have dividend stocks, you have ETFs, you have indexes, you have crypto. Okay, in the stock market, you cannot invest in real estate, but in otherwise you also have real estate. You see, you have many different assets, and all of those assets have very different specifics, okay? For example, here we have one post, okay, by Motley Fool, okay, and here they tell you an example of a well diversified portfolio, okay? You see stocks, you see bonds, you see gold, you see real estate, you see cash. What is this? Well, this is crypto, and in my opinion, you should not follow that, okay? Because look, you have 1, 2, 3, 4, 5, 6 different assets, okay? You have stocks, you have bonds, which have different characteristics of the stocks. So you need to relearn the whole bond market. Then you have gold, which is different from both stocks and bonds. So you have to relearn how commodities work, because gold is a commodity. Then you have real estate, which is another type of investment. So you need to relearn how is real estate market. Okay, cash is just cash, okay? And then crypto, extremely specific market, bro, where everyone fails because it's so hard to analyze crypto because of so many different confluences and so many different factors that influence the crypto price, okay? So that's why you focus on one thing only. For example, I focused only on stocks at the beginning, okay? Only on stocks. And then when I mastered stocks, I went then to, where is it? I went to, okay, indexes, okay, I went to trading, okay, but first I was consistently making money with stock market investing, and then when I got comfortable with investing, then I went to trading, okay? So now you want to do the same thing perhaps, okay? Perhaps you don't want to do investing, you want to jump straight into trading, okay? And with trading is the same thing. Focus on one asset first until you are comfortable with it, and then you go to the other one, okay? For example, look, even though you can see my crypto chart right now here, even though you can see that this chart is for Bitcoin Cash, this is not my main investment. My main investment, bro, is actually Nasdaq. I am trading with Nasdaq, and until I will get extremely comfortable with Nasdaq, then I might do some other investment, okay? Then I might trade, I don't know, Bitcoin Cash, for example. Then I might trade, for example, here, British pound and Japanese yen, okay? Whatever it is, but first I want to master Nasdaq and then go to other assets, okay? And now you are asking yourself, yeah, then why do I have crypto chart here? Because the reason I have crypto chart is because crypto is opened also on the weekends, so I can practice my strategy that I am using on Nasdaq. I can practice on crypto, okay? But I'm not actively investing in crypto, okay? I am just practicing it. I am practicing, you see, I am paper trading crypto, okay? Because yeah, we want to avoid this, okay? We want to avoid managing everything, because everything will just confuse you, okay? Just like I told you here with this well-diversified portfolio, okay? Well-diversified portfolio. We want to invest only in one asset, because you see, bonds are different type of asset in comparison to stocks. Then gold is another one, real estate another one, crypto another one, okay? We want to avoid managing everything, because everything will just confuse you, okay? It will just confuse you, bro. So let's go now here. Now, the third point that I want to discuss in terms of diversification is the risk, okay? Of course, you will argue that a well-diversified portfolio is less risky. In my opinion, that's not the case, okay? In my opinion, having a risky investment means just being lazy, because you didn't invest enough time to analyze that particular asset, okay? That's why you are risking your money, okay? You see, risk is doing something that you don't understand, okay? For example, when I started first investing, or actually trading, I started trading Bitcoin back in 2017, and at that time I had no idea how trading works, okay? At that time I didn't even have an idea how stock market works, how stocks works, okay? Yes, of course, I had interest in the stock market since 2013, okay, when I was 13 years old, okay? And then 4 years later, I decided that, okay, I want to start investing into stock market. I want to start doing something, okay, with the stock market. So I started trading, okay. But little did I know that knowing more actually reduces the risk, okay, because at that time I was actually having increased risk because I simply didn't know what the fuck I was doing, okay. And I was just, for example, with Bitcoin, okay, this Bitcoin was my biggest mistake in 2017, okay, because what happened with Bitcoin was actually, wait, let me do one clean sheet, okay. Okay, let's put okay, let's just put another page. Let's delete this. Shit, wait. Okay, shit, sorry, this is a little bit unprofessional from my side, but let me add, okay, page. Okay, so what happened with Bitcoin was actually like this. So I saw that the market was going down, for example, so I sold here, okay, so I went short here at this point, but little did I know that we actually swept a high time frame liquidity here. So this was actually a retrace to go then slowly up, break structure, and so on and so on. Okay, right now I know that, okay, but at that time when I was 17, I had no idea, okay. Or for example, here we have now, let's say that here we have a high time frame liquidity, okay. Then the Bitcoin went up, okay, so I actually bought it here, okay, here I bought it, okay, and then the Bitcoin went up, swept liquidity, went down, broke structure, and then went down. And I didn't know what the hell I was doing wrong because I had no idea, okay, so I was actually risking a lot of money, okay. And the next biggest mistake was actually one of the stocks that I sold recently. It's called Atcore, okay, and I sold it with minus 2,500 loss, okay. Why? Because let's go to the point one. Here I had more than 7 stocks, okay. I had a lot of stocks and I simply didn't have time to analyze all of them because first of all I genuinely didn't have time because of the work and all of other things, and second reason was because I was a little bit lazy, okay. So I didn't analyze at Core, okay, and I saw that they consistently have been making less and less and less money, but I didn't pay attention to that, okay, and because I didn't analyze it, and then I lost money, okay. So that's why I was risking, let's recap it, okay. With Bitcoin I was risking it because I didn't know the trading concepts, I didn't know how trading works, and with Atcore I was risking because I didn't know how the company functions, what do they do, how are their financials, and things like that, okay. So at the same time, even though we know that the stock market is risky, okay, we have to, and even though we know that we are practicing, we have to know that every investment is risky, of course, okay, but the more we practice and the more we know, the more we reduce the risk, okay. For example, right now I am just for fun here testing, okay, but this is not real money, okay. I tested with this trade, let's see if it goes, into my favor, okay. If not, no worries, it's just a fake trade, but this is how we learn, this is how we practice, and this is how we understand better how trading in this case works, okay. And of course every loss is an opportunity to learn. With Bitcoin I lost around 2,000 euros in 2017, okay, so that gave me an opportunity to learn the market, how it works, how trading works, and so on, okay. And of course on my YouTube channel you can see that I'm losing money quite often, okay. And every loss is an opportunity to learn something new, okay, to learn and analyze what went wrong with every single trade, okay. So yeah, that's about it, bro, okay. So what we want to do with diversification is that we completely ignore diversification because at the same time we want to pick an amazing stock, okay, we want to pick amazing stocks, we want to understand them and then invest into them, okay. And of course with the diversified portfolio we want to focus only on one thing, master it, and then gradually proceed to another asset, okay. So yeah, that's about it for today, bro. Feel free to join the Discord, it's linked in the description, it's free. I am not selling anything, okay. I'm simply sharing with my Discord server my knowledge, my experience, and hopefully I help you as well, okay. So bro, do the hard work and see you on top of the world.